what we can do is extrapolate what we believe would happen based on the data that we have and the current financial conditions, like the current economic conditions of Bitcoin mining.
What do you think about the upcoming halving? Are you obviously, as the lowest cost producer in the world, you are literally, quite literally, the best placed miner. You will go offline the last as far as difficulty adjustments, the halving. Do you what kind of, I guess, percentage decrease do you see coming in the difficulty adjustment when the halving hits? Do you think there will be a corresponding rise I personally think that Bitcoin's price will actually run up due to an ETF approval before April. I think we'll have a spot ETF approval before April. But uh, what is your opinion about the difficulty drop that we might see at the halving?
Yeah, that's a great question, and it's hard to speculate about what market conditions are going to be when the halving occurs. The halving will occur sometime around next April, and what we can do is extrapolate what we believe would happen based on the data that we have and the current financial conditions, like the current economic conditions of Bitcoin mining. So currently, the average miner on the network is about 27 joules per terahash. You can probably say that when you include cooling load and ancillary load, that's probably like 28 or 29 joules per terahash. And for those machines, the current break-even price is about $70 per megawatt hour. And if difficulty rises, that break-even will go down. If the price of Bitcoin goes up, that break-even will go up. But if we were to hypothesize what the break-even would do were the halving to occur tomorrow, then the break-even for the majority of those machines would drop to $35 a megawatt hour
Yeah.
from $70 a megawatt hour. And if you look at data that's been aggregated and published by Luxor in the past, that would make about 50% of the global mining industry unprofitable. And so certainly there would be some time while the difficulty adjustment responded to slower block times. And as blocks were found more slowly, we would get a sense of how much uptime of the existing fleets out there were reduced in response to lower profitability, and perhaps how many operations just decided to shut down altogether because they were too far away from a break even, or their financial position was too weak to survive a long period of negative profitability. What will happen in ERCOT, you're going to have two different scenarios. If we just assume all of the Bitcoin miners in ERCOT have the same efficiency of fleet, which is not the case. Obviously, everybody has different machines and different cooling and different hedge contracts that exist. But let's just assume, for the sake of simplicity, that everyone's got about 28, 29 joules a terahash of efficiency on their fleet on average. And after you make that assumption, you can really separate it into two buckets. You have people who are real-time market consumers, like Cormant, where we only consume power when the revenue is above what we call the Bitcoin opportunity value, which is Bitcoin mining revenue expressed in dollars per megawatt hour. So we would likely, just in our particular operations, our uptime would go down pretty significantly in response to that, where we would only be able to mine profitably if the price of power was below $35 a megawatt hour. In ERCOT, that is still about 60 or 70% of the year. So we would still be operating at a slight profit or break even that percentage of the time. That position feels really safe, feels like a really good spot to be in if you're a real-time market consumer. If you're in West Load Zone, you benefit from the export constraint from West Texas to East Texas, not enough transmission capacity. And so those miners will be in an okay position, at least relative to their peers. The interesting thing that could happen is, since the invasion of Ukraine, forward power prices have really not been much below $45 or $50 on average. There's been some periods where you could maybe get lucky and lock in a $40 hedge for the next year, but we've seen long periods where it's $50, $60, even $70 a megawatt hour is what the forward curve of 1 year of around the clock power costs. And so if you have a hedge and your hedge goes through the halving, you don't have the luxury of curtailing in response to high prices. You have to consume that power. So that dynamic could be really interesting, and I suspect that every miner in ERCOT who has a hedge or is planning to hedge is watching the halving closely, and certainly some of the folks that we speak to who advise the different mining firms in the industry there, the halving is all over their radar. The consensus seems to be that nobody really wants to be hedged much through April, at least right now. I think it's still too far away to make a definitive decision one way or another, but it's going to be interesting. I think there's definitely going to be a significant difficulty adjustment downward. It's not going to be like it was in the last big period of sort of mining industry bear market, which was the fourth quarter of 2018. There was a 30 to 35% difficulty adjustment in November of 2018. It's a different industry now. A lot of these companies have huge balance sheets. They can withstand periods of negative profitability. But at the end of the day, I mean, numbers are numbers. And if you are producing Bitcoin at a loss, there's not a really good answer as to why you shouldn't curtail or shut off that load. If you have a PPA, I mean, you're either producing Bitcoin at a loss or you're taking a loss on your power contract for every interval that it clears below the price of your PPA, of your hedge price. So it's a tricky situation, and we'll see what happens. Texas is in a much better spot than most of the rest of the world, but it's going to be a good event for the industry in terms of only the strongest producers are going to survive. Probably the percentage of renewable energy that we're using is going to go up because renewable energy has no fuel input. So when there's large renewable output, you tend to see the lowest prices. That's the only time when you see negative prices is when it's all mostly dominated by renewables. So yeah, we're excited that it looks like we will survive it and potentially thrive through that period. And this is why Bitcoin mining is so fun, because it's such a dynamic game theory industry, and the behavior of every individual participant affects everybody else on the network. It's really fun, almost an organism of sorts.
Hey, it's Amy. Click over here to subscribe, click over here for more content, and we'll see you next time.